Welcome, everyone. I'm Karen DeLone, the Chief Operating Officer with Life Sciences Pennsylvania. We welcome you to the Art of Fundraising. Quick reminder about logistics. From 9 to about 9:57, we'll have a conversation here today with some experts to provide guidance for you. At 10 o'clock, so from 10 to 10:30, you have the opportunity to be in breakout sessions and ask those experts anything you like. We've got them here. Please take advantage of that opportunity. We'll be using the chat function today to take your questions. Feel free throughout the presentation to shoot in any questions you may have. And finally, a thank you to Danforth Advisors and Gallagher for providing this information today. We appreciate it. Barb, over to you.
Thanks, Karen, and great to see everyone. I see lots of familiar faces and some familiar names. So want to thank first off Life Sciences Pennsylvania for hosting this event. As Karen mentioned, Gallagher and Danforth are sponsoring this event, and we're really excited about today's discussion. Before we get into introductions, I'd like to just cover a few housekeeping items. As Karen mentioned, after the presentation, we will have breakout sessions, and I can't encourage you enough to join those if you can. They are really interactive discussions with the participants that are here today, not just Roberto and Matt and myself, but also all of you. So highly encourage you to join that. During the presentation, we would love for you to ask questions. So please ask away. There is a chat feature. Both Amanda and myself will be monitoring that chat. And as the questions are relevant to Matt's going to do some presenting on, a few topics. It would be great to have some questions from the audience so we can make this as relevant to those that are attending today. And just in terms of setting the stage for what we'll be talking about, this session is really talking about managing risk. Danforth has been presenting a series of Art of Fundraising sessions starting last summer, and we started the first two with really just understanding the landscape of raising capital, everything from seed to IPO. In another session, we had dissected the mechanics of convertible notes. And our last session was actually attracting and building a board of directors, where we spoke about the key components of what type of skill sets, at what point it's a good time to build a board. So this felt like a very natural segue to, now that we've talked about building your board and your team, is to really start thinking about managing risk. And risk is an area that we don't want to talk about, but we all have to realize that there are risks that the company faces. And both investors and boards want to be comforted by the fact that companies are doing the right thing to make sure that they are creating good governance for their companies as they grow. So there are actually 2 more sessions that we will be having through the end of the year. And we are always soliciting feedback, asking for suggestions for topics. So highly encourage you to send over, send to me, send to Karen, Amanda, ideas for future sessions. I know a few that come to mind when I'm talking to different people. It could be dissecting your investor deck. It could be perfecting your pitch, whatever it may be that you think would be relevant to those attending, those that are raising capital. Please let us know, because that's what these sessions are intended to be. So without further ado, we're going to jump into introductions and then jump into the content of our conversation. Just as a bit of background for those who I have not met yet, my name is Barb Carlin. I'm the Managing Director for Danforth Advisors and in the Mid-Atlantic region. And Danforth is a life sciences exclusive firm helping companies, everything from day one setup structure, whether that be finance, accounting, HR, and now we've actually added a few other service offerings in our group, including strategic communications. So feel free to reach out if you'd like to hear more about what we do. With that, I will hand it over to Matt Medeiros from Gallagher, and then we'll introduce Roberto Cuca from Tella. Matt?
Good morning, everybody. Thanks for attending today. Matt Medeiros from Gallagher. I'm the regional leader for Gallagher's life science practice. Gallagher is an international risk management and insurance consulting firm. We partner with innovative companies in the early stages of development and continue to do so as they grow and reach key milestones, such as achieving commercialization or clinical trials or an IPO. Work to really secure critical coverages to protect Ds and Os, key persons, assets, and cyber risk and employees. We currently work with over 3,000 life science companies globally, as well as 200 plus publicly traded companies. So we have a wide range of expertise serving biotech, pharma, CROs, med device companies, and diagnostic companies. And it's really my role to work directly with those companies as they grow over time. So feel free to reach out if you have questions. Look forward to today's discussion. And thank you again, Danforth and Life Science of Pennsylvania for organizing this today.
Okay. Thanks, Matt. Roberto?
And I'm Roberto Cuca. I'm COO and CFO of Telebio, a public soft tissue preservation and restoration company. I was previously CFO of another medtech company, and before that, CFO of a private spec pharma company that went public. So like many of you, I've had to deal with insurance and risk management issues from a number of different perspectives. And thanks, as Matt and Barb said, to Life Sciences PA for hosting the session.
Great. Thank you. So I'm going to hand it over to Matt. And just to set the stage, as you all may know, the two topics that we're really going to focus on today's session are D&O and cyber, two areas of insurance that are getting a lot of attention these days. And, you know, I think what you're going to learn are the costs of insurance, of getting insurance, and maybe the cost of not getting insurance. We all know that insurance feels like something that you don't appreciate its value until something, you know, happens where you may need to lean on it. So with that, I'm going to hand it over to Matt. We're going to start with the D&O topic. And again, please ask as many questions. This is intended to be an education series. So we are wanting to, you know, provide some education, you know, maybe some information about D&O and or cyber that you weren't aware of. And then at the end, we're really going to wrap it up, hopefully with some good actionable suggestions for you to walk away with and hopefully, you know, consider implementing in your own companies. So with that, Matt, I'll hand it over to you.
Great. Thanks, Barb.
Yep.
So managing risk is definitely a tricky topic. When I think about managing risk, I'm looking at identifying risks and then trying to come up with a strategy to address those risks. So biotech life science executives deal with a host of operating risks, those ranging from a simple slip and fall in a lab to a cyber loss or a D&O loss. And really what's more stressful is you're dealing with the stress of making actionable decisions while navigating an emerging industry and trying to bring new therapeutics or devices to market. And with increased regulatory pressures, changing financial conditions, unique PR exposures, Ds and Os really need to protect the individual executives and the company from claims made against them. So D&O coverage includes both defense coverage against specific lawsuits and coverage for any subsequent judgment or settlements. So when I think about the top, let's say, 6 reasons that a company would consider purchasing D&O, a lot of times it happens when a company is at the early stages and are thinking about accepting their first institutional money. And investor expectation comes into play where, you know, most investors will tolerate some level of risk. And really the most attractive investors are ones that bring knowledge along with capital and are going to provide long-term support. While those investors have an appetite for risk, it's common to want to see some sort of evidence of a risk management strategy. And this is likely going to include directors and officers liability coverage, which is covering the directors and the senior management as well as the employees for the decisions that they're making that may bear a direct relationship to the return on their investment. Another, topic today is attracting new board members and executives. As we know, companies that are in early stages and growing are looking to attract the best possible people to their board and to their executive team, especially in a situation today where funding is tight. most investors are looking at that team and how can they, assist in growing the business and steering the business. And a lot of times the D&O policy is required by these individuals. Regulatory obligations, you're out blazing trails, and it's a revolutionary business. And sometimes it can be a real challenge to comply with laws and regulations, especially as they're continually changing. Some of them are outdated. So non-compliance could mean paying fines and penalties. And really, the D&O policy supports the opportunity for founders and executives to go out and focus on their job and kind of put those regulatory issues aside. And then, of course, bankruptcy risk, as we know, there could be bankruptcy, and in that situation, D&O does protect against personal assets from creditors. So it's an important aspect of the policy as well.
Yeah. Hey, Matt, maybe I'll ask Roberto, maybe without naming names, Roberto, if you have had any experiences, needing to lean on your D&O insurance with respect to, claims against directors and or officers in any of your roles.
I have not directly, but companies that I have worked at, after I've left, have sometimes had, downturns from bad data, for example, which is a classic example. If you have a bad outcome, you almost inevitably get sued with a claim that your disclosures about the risk were insufficient. And it's your D&O insurance that protects the company and the officers from that. So post having worked at a company, I did get involved in that sort of coverage and the litigation associated with it.
Mm-hmm.
And was certainly glad that we had gotten sufficient D&O insurance such that there was little concern at the company about being able to cover the liability.
Right. And that's a good point. I know a little bit further into the discussion, we'll talk about who is actually covered under D&O. And you as a prior officer of a company, that's a really good conversation. And I can also share from experience that, working in a public company, when data comes out, sometimes even data doesn't come out, and there's some news that may be misconstrued that, causes the stock price to fall. And when stock prices fall, the shareholder lawsuits start. And, but not to say that private companies aren't equally exposed from those types of risks. So, D&O insurance is definitely something, needed, not just when you're public. And I can say that from experience. I spoke with someone recently who said, oh, I didn't know D&O was needed until we went public. And it is, in fact, something that private companies need to consider as soon as they start operations. Okay, Matt, you want to go on to the next slide?
Sure. Yeah. So just as my 4-year-old son's learning the ABCs today in preschool, we figured to spend a little bit of time on the ABCs today. Insurance companies like to have a lot of jargon out there, and this is a good example of that. But just from a 30,000-foot view, we thought we'd go over the three pieces of the D&O policy. This might come up during the purchasing process to just start to familiarize yourself. So side A is the personal asset protection of the directors and officers. And side A typically is tapped during an insolvency when funds aren't available to pay. And then side B is for corporate balance sheet protection for indemnification obligations to the directors and officers. B is most often used when claims happen and the company does indemnify. This portion would fund defense and indemnification of those claims. Side C is corporate balance sheet protection for the entity for alleged wrongful acts of the organization. And this reimburses the company oftentimes for security claims when the company is named. So just, wanted to kind of touch on that. If this is terminology that comes up, when you're speaking with your insurance broker or your insurance provider, just start to understand what these actually mean.
Yep. And I would say the one thing, understanding that this is an education series and you won't be tested afterwards, but a lot of times just having a cursory knowledge of what side A, B, and C cover is never going to hurt. And then when the time comes to have discussions with potential board members and or annual meetings with your board members, I would suggest don't hesitate to bring your insurance broker into the meeting, even if you're not a public company, just to present to your board. And, you know, in many cases, these are your investors as well, who, you know, the broker can just, you know, provide kind of a, you know, an update on the program, the thoughts on the adequacy of the coverage. And again, I think it's just good housekeeping to consider, you know, bringing those in. If you're uncomfortable talking about all of the mechanics of insurance, I know there's a lot of insurance jargon, you know, don't hesitate to lean on your partners to communicate that with your board.
Yeah, I think that's a great point.
Yep. Okay, so maybe we head into who is covered on a D&O policy.
Yeah, so I think a lot of times there's a misconception that it's just, you know, the board and the senior executives, and actually the policy language allows for a pretty broad definition of who's insured. So not only is it the D's and O's and the executives, but past, present, and future non-executive employees, the general counsel, temporary leased
I'm
employees,
looking forward to it.
and volunteers. And then, you know, with today's environment, many companies, especially at the early stage, are relying on a series of independent contractors and, you know, others that are third parties. And, you know, in that case, there's the opportunity potentially to include these people in the D&O policy by endorsement. So it's really important, I think, to have a good, you know, working relationship with your broker as things change and you're bringing people into your company, or working with, you know, others that are third parties to understand what the policy requirements are and how that best can be addressed.
Great. Yeah, I can say from experience, you know, as we provide CFO services to our clients, if we are outward facing, if we are investor facing, we do actually require our clients to add those individuals onto their D&O policy. And it is, especially for small companies, as you know, when you're in the early days, you're leaning on a lot of external partners, and just to know that they're covered as well. So Matt, I think you and I had talked briefly about, you know, what if you were to bring, you know, a CMO or a CFO on, you know, what are the, you know, what are the first things that you should be thinking about? And maybe we get into this next conversation when we talk about limits. You know, if Amanda can move to the next slide, talking about limits, because everyone says, okay, now I need insurance. The next question is, how much do I need? So maybe we go through the process, and then I would love to hear, Roberto, your experiences of kind of managing this process internally.
Yeah. So this is one of the, you know, the biggest questions that we get, especially when you're first buying a policy, is understanding what's required and then what sort of limits should be purchased. So to me, any early stage company, the underwriters are trying to think about what's the viability of the business, what's the plan, and you know, how do they project over the next few years from a financial standpoint. So we're always looking at, okay, you want to provide an investor deck, pro forma financials. You really want to be able to show that the company has enough cash runway to get through, you know, a certain time period. And with that, oftentimes at the very early stages, think Series A or earlier, early stage companies may not be able to obtain more than $1 to $3 million in coverage. And there might be at times, by example, either a VC or a high net worth individual has a requirement for a certain limit of coverage. They may be looking for 3 to 5 million. It just depends. But you know, we really try to focus on at that early stage, looking at the 1 to 3 million level. And then as the company grows and, you know, matures, there's a larger valuation, more assets, employees may be advancing towards FDA submission or commercialization, and still private. Those limits typically will go up to anywhere between 5 and 10 million. the other thing is the underwriters are looking at the executive team and looking at the operational track record of that executive team, both having financial and execution risk. And really, at the very early stages, the carriers are trying to limit their exposure to bankruptcy risk. So they're wanting to make sure that there's viability around the business. So that's just kind of a quick overview of the underwriting process. I think it's really important just to work closely with your team to come up with the best information possible and present yourself in the best light, and then to work with the right broker to be able to steer you and work through that process with you.
Great. Roberta, maybe just sharing some of your personal experiences of maybe for a first-time insurance policy or renewal policy, who internally is involved and what have you found to be kind of best practices when going out to secure or renew insurance?
Sure. So, over the course of a number of pitches for insurance, my experience is that insurers definitely think like investors, but with a downside bias. So what they're worried about and what they're trying to figure out is what are the risks of the company running out of money, and what are the risks of significant devaluations of the public company stock or of the private company valuation that they may have to cover. And so they want to understand the same things as investors do and want to talk to the same people that investors do. So I've found that it's very effective to give the same presentation that you would to investors with the same people, and importantly, bringing in the CEO and whoever else on the team you would normally include into that. Because as Matt said, they are interested in understanding how effective the team is, how much experience they have, and how well the team will be able to manage risk together. So making that presentation as strong as possible can help you potentially reduce the expenses that you're going to have to pay for the insurance coverage that you're going to buy. It's also a good practice dry run for investor presentations that you may be doing later as part of an IPO. So to the extent you do get pushback from other members of your management team, you can pitch it that way. The other thing I'd say about the process is to reiterate something Matt said. Your broker is a resource for you. And so you should lean on your broker to help explain the policies that you're going to be buying to your board. But your broker will also be a source of data on comparable company coverages. So, what are your competitors buying? What the trends are in the market that will help you decide how much to buy and help you make your board comfortable with what you're buying.
That's great. Yep. All relevant, pieces of advice just to be ready and treat it, like you said, as an investor presentation. And, maybe just all of those things listed, the application, your deck, your financials, your cap table, these are things that, you should always be prepared to have at the ready. Cap tables, financial projections, historic financials, and your investor deck. As you all know, if you are raising capital, should be living documents. So just make sure you've got the appropriate resources to make sure that they are, ready to go, because you don't want to delay, the process. And even once it gets into underwriting, you're going to have to wait quite some time just to get that, response. So you want to make sure you're as proactive as possible. And it really is a group effort, Roberto, as you mentioned, those internally, especially your executive team who would be presenting that story. So, okay, I want to be mindful of the clock because I know we were going to switch to cyber soon, but maybe before we do that, I know, Matt, you were going to talk about some trends both in the private and the public sector for D&O insurance premiums these days, or coverage.
Yeah. So, the good news is in this inflationary environment, the D&O market actually is in a downward trend. And if you could flip to the next slide, that it will show that trend. Just as far as the marketplace, we were in a market trend going back a few years where increasing prices were really affecting our clients, and that has reversed. And this is a simple case of supply and demand. So you have a number of new entrants, meaning insurance companies coming into the market, willing to underwrite these policies, and with that, creating more competition. The other thing is lack of IPOs. So IPOs are new business for D&O underwriters. When those IPOs are not happening, they're really clamoring over existing policies, and that creates more competition. So given the abundance of competition, if you're thinking about your either private or public renewal coming up over the next few quarters, you should be in a good position to save money and even do things like decrease retentions, or potentially buy more limit for the same dollar spend. So it's all good things to think about from a rate standpoint. What we don't know is there are some economic stressors out there right now, and how could that lead to potentially rate changes in the future that are more in the positive territory. So we just continually keep an eye on that. We actually, through the bulk of data that we have in our data and analytics systems, we track this very closely and provide guidance on a regular basis to our clients. So it's important to keep your finger on the pulse here.
Okay. Are there any questions? Please use the chat feature before we move into cyber. Any D&O questions that we can answer, Matt, myself, and or Roberto can field. If there are none, we'll move on and discuss cyber insurance. So if we could advance the slide, maybe 2. Okay, Matt, I'll give you the floor to talk about the types of cyber the cyber threats that are out there today.
Yeah, no, hot topic. And it's funny, a lot of times companies think that cyber attacks only happen to large companies. And in fact, more than half of all cyber attacks are directed at mid-size and smaller businesses. So this is a very real threat. It's something that I know, we're dealing with every day from with our clients. And it ranges. The companies are partnering with all types of outside suppliers and contract manufacturers and IT providers, but a lot of these attacks happen on the most simple basis. You have, for example, a business email compromise where, there's a malicious actor that's looking for vulnerabilities, and they look to exploit or dupe an employee into moving money into a fake account. And for example, they may sit in your company's email traffic, start to identify the key players and habits and language, and then they use that to dupe a subordinate into transferring money to another account. This can happen with a wire transfer, and you don't really discover this until a few days later, where the money can't be taken back. So they're really smart in the way that they're doing this. They're trying to impersonate people within your company, and they're sitting there and waiting for the perfect time to pounce. Invoice manipulation is another big one. We see hackers impersonate the company, tricking customers or vendors into payments to fraudulent accounts. By the time you notice that this deception, the money's already lost. So those are just a couple of quick examples. I mean, the traditionally you thought of losing personal information as being one of the top cyber risks. We all saw things that happened at Target and Home Depot years ago, but really these are happening with regularity, and it's these types of schemes that involve what I call social engineering, which is just simply the idea of taking advantage of people's trust, and sitting and watching what's happening within the company's IT system and taking advantage of it.
Yep. And Roberto, you were mentioning that you actually fell victim to one of, a cyber threat. So you want to share your personal experience?
Yeah, so it does happen. So I was CFO at a small company, and somebody posed as me, contacted our HR, and claimed that I was having a refinancing of my mortgage and needed to update my banking information, and essentially reprogrammed, or had HR reprogrammed the deposits of our paychecks. And they had figured out roughly the time when the bonus checks were coming out. And so they were really targeting the bonus check, which was, a larger payment. They'd set up a temporary account at an internet bank, and that bank deposited the regular pay check but rejected the bonus check, probably because their security was guessing that this is what was happening. So my base pay did get acquired by the hacker. And that's the sort of thing that would have been covered by cyber insurance. We did have cyber insurance. The fact that the bonus payment wasn't taken meant that it was below our retention, but it does happen, and that's what you buy the cyber insurance for. The other big benefit of cyber insurance, frankly, is the underwriting process that you go through. So the underwriters will assess the adequacy of your security, and in a sense, give you a free review of your, approaches to security, and help you focus on what you need to update. Since better practices get you better prices for the underwriting. So it is a good process just to go through, because it does test what you're doing with your IT.
Yeah, that's a good point. And I know that we have I'll say those in finance are not unaccustomed to seeing these types of inbound requests. It could be finance, it could be HR, it really could be anyone. I think there are some misconceptions sometimes that, they only focus on certain individuals. I do know of a company recently where, 2 employees that aren't on the R&D side of the house received an email that seemingly came from the CEO asking them to go out and purchase gift cards. And believe it or not, they were new employees. They were, highly, complimented by the fact that the CEO reached out to them personally. It was not the CEO, as you can imagine. And, until that, the damage was done, there was no way of really knowing that, that this was happening. So I think educating your employees and those that represent your company, they could be external individuals as well. Just the importance and the things that, seemingly seem real, always question it. We've always had kind of a recommendation in finance that if anyone ever calls and says to change a bank, always verbally confirm that. Call that individual, call that company on the phone and confirm that, especially in the advent of what happened earlier this year with people changing banks. It was happening before. You can imagine what those that were committing these crimes before are doing now, knowing that there's even probably potentially more people that are changing banks. So really just keeping completely vigilant about the types of emails that are coming in and be over suspicious of things. It will never hurt you to ask too many questions when it comes to redirecting funds or things of that sort. So
I think that's just a comment on that. I think that's a great point, because cyber liability has been around for 10 plus years and was relatively easy to purchase. But over the past, I'd say 4 to 5 years, we've really received a lot more underwriting scrutiny because of the explosion of claims. So we've had the marketplace from a price standpoint has went up significantly. But what gets lost in that is just as if you don't have a sprinkler system in a warehouse, you might not be insurable or pay a higher price for it. In this case, if you don't have certain protections in your IT infrastructure, you may not be insurable, 1, and 2, you're going to really pay a higher price. So it's really important to work with your IT outsourced IT firm and understand what are those best practices. We'll get into talking about a couple of them that the underwriters really are looking at today. But I think a lot of people have a misconception when they go to buy cyber insurance, especially at the earlier stages when they may not be as sophisticated from an IT standpoint, that there are a lot of requirements, and those requirements can be a pain at times to implement. So, but they're necessary to protect everybody.
Yep. Amanda, do you want to move on to the next slide? Thank you.
So the cyber policy you can think of in providing 2 different buckets of protection, covering both your losses as well as your liability to others. So your losses would be things like your breach response, network extortion, data restoration costs, and loss of funds that are transferred to others. And then your liability to others would be things like privacy, internet media liability, network security liability, as well as regulatory investigations, fines, and penalties. In the event, the other thing that really comes up that I think is a great feature of a cyber policy is many, especially early stage companies, don't have a crisis response plan for a cyber incident. And embedded in the cyber policy is a crisis response plan that is simply a number that you call that dispatches a host of resources on your behalf, including a breach coach, an attorney, a forensic investigator. So that single point of contact is really quarterbacking the response to the cyber breach, as well as providing funding, defense, and protection against liability. So it's not only that you're buying insurance, you're actually buying a risk management tool that is helping you to respond should an event happen. So it's really important just from an overall risk management strategy to have that plan, especially as the company grows. You may have the internal resources, but at the smaller stage, this can really be a very valuable benefit to the policy.
Great. What? There we go.
Yeah, so we touched on this earlier, just in terms of what are the underwriters looking for. And Roberto made a great point. You can actually get a kind of a quick checkup from the cyber insurance carriers that they'll give you. Many of them will actually give you a report at the end of the underwriting process, showing you your vulnerabilities and any recommendations that they may have. So this is a free resource that is great. You hand it over to your IT provider, and they can really help you make any of those changes. But I would say the top, 5 areas that they're looking at are multi-factor authentication. So knowing that email and systems are protected from remote access, especially within COVID and the change to remote work and people working with a whole myriad of third parties that are all over the country. This is a really important piece. And then patch management, knowing that systems are the vulnerabilities are updated and remediated. And then monitoring data backups as well. So if the system needs to be restored, and you touched on this earlier, Barb, employee training. Human error is probably the most common form of cyber claims. So the bad actors are looking to, take advantage of people's trust, and the fact that they are able to come up with some of the schemes that we've seen is incredible to me. But a lot of times it just has to do with we're all busy. We're all kind of chugging through our day, and we're not, always thinking about somebody trying to take advantage of us. So employee training does become critical. There are a lot of resources out there to help with employee training as well.
Great. And maybe I'll just ask Roberto some of his experiences in the different companies he's worked in. Roberto, can you think of anything that you have found works well mitigating those cyber risks in your organizations?
So I've been fortunate in that even in the smaller companies I've worked in, we've had dedicated internal IT personnel. So I've been able to deploy the resources to get pretty good systems in place and processes, and that has helped in allaying the cost of cyber insurance at those companies. It is a bit trickier when you're relying on external IT support, and I've talked with other CFOs who've been at earlier stage companies where they're doing that, and it does require a bit more attention to make sure that somebody is being responsible for the risk management via the IT systems. And a lot of CFOs don't have a lot of direct experience themselves with IT, and so relying on that external resource is a bit trickier. But boards are being more and more sensitized to these issues, and I've had a couple of board members of different companies who really put a microscope on what we're doing as far as IT security and how we're handling our cyber insurance. So that's sharpened up my own skills. But you will come across board members who are aware of the space. and want to pay attention to it. And that can be either a pain in the neck or helpful to upgrading your systems. But I think it is trickier when you don't have a dedicated internal person. You just have to spend a bit more time on it yourself.
Yeah, I would agree. And I'm sure many of those that are on the call today don't have maybe the resources to employ those IT resources internally. So just making sure that if you should outsource or lean on third parties, to make sure that you've got a quarterback internally, because to your point, boards at all levels, private, public, have that fiduciary responsibility of oversight. And, they want to make sure that there are, activities and actions in place that would mitigate those risks. And, it's on their, shoulders as much as it is the company. So, yep, really good point there. I'm looking at the clock. We do actually have a few questions in the chat, on both topics. So, Matt, I can't recall. Is this your last slide?
I think there's one more.
Okay.
Get into
Why don't we?
questions.
Why don't we? This is a good
Yeah.
segue. So why don't we cover this, and then I can
Right.
open up a few of the questions from the floor.
Yeah, so I think that we've obviously touched on cyber and D&O, which are two very important topics, but that doesn't catch all in terms of the coverages that you should be considering. Now, at the very early stages, oftentimes you're taking, lab or office space, and of course that is going to prompt the need for a liability and property policy. But then as you're advancing towards R&D and clinical trials, we get into pretty advanced supply chains, and in that you want to look at a supply chain policy. You may also want to look at a policy for business travel. When people are traveling overseas, how are those individuals protected while they're in foreign countries? And just in terms of the products liability when you get to clinical trials. So placing a policy for clinical trials, and then in the commercialization stage, a policy for products liability. So really the point here is you're out, founders and executives are out trying to grow the business and advance towards key milestones, and insurance sometimes gets lost. So having the opportunity really to plan for the future and understand what's next is critical, just to make sure that you're protecting your people and your assets, and thinking about this and being proactive.
Yep, and I know, like many topics, the biggest fear is I don't know what I don't know. And I know, Roberto, you had mentioned your experience at some point with insurance and a type of insurance that you were unaware that was even needed.
Yeah, so one thing that's not on the list here, but that I know that some VCs definitely like to have is key person insurance. I've been in a couple of companies where we've had legacy policies from earlier in the company's history that were mandated by the VCs. Definitely when you're setting up supply chain, something you might not be thinking about is cargo insurance. And that's something that you can either get as part of the whole supply chain policy or that you'll need specifically for your shipping. And then business continuity insurance is one that a lot of board members will ask about and often debate, the utility of it. Once you're public and a bit bigger, it's unlikely to cover the impact to your stock price, but still can close the gap on what you otherwise would have earned and keep you running if your cash runway is something of concern. Mm-hmm. But I'll say what I said before, which is that your broker is the place that is the resource that's going to help you figure out what's available, what you need, and what other companies that look like you are buying. And help you run through this checklist and decide what it is you should be acquiring.
And while we're talking about a lot of times complex risks, but simple things can happen. I've had an instance where a company was advancing towards their first FDA submission and had a prototype, and a key component of that prototype was literally crossing the street and fell off a cart with FedEx in the rain due to wind, and that part was damaged, and the submission was pushed back a month. So we think about, cyber, and we're talking about all these complex areas, but very simple things can happen that affect the business. So it's just important to really cover all aspects and have a good conversation with your team and your broker to understand how you're addressing those risks.
Yep. Okay, before I start with a few questions that came in, I will remind people, we'll share these slides as well. So for those that were interested in seeing the content of these, we will distribute those. So one of the questions that came in was why the reason for high limits on the D&O? What is a risk beyond what people have invested?
So just as far as the potential for liability, and I'm not sure if we're talking in the public or private realm. It sounds like maybe this is directed in the public company space, but in a private company, you're looking at the amount invested, you're looking at the assets, and you're looking at what type of either drug or device is being developed. So as you get further along in the clinical trials process, there's the possibility for, by way of example, a claim alleging misrepresentation of the sufficiency of the application to the FDA. So the D&O policy covers a lot of areas, and one of those is fines and penalties, as well as just personal asset protection for the board. So some of this is really just a personal feeling of security, as well as assessing some of the aspects of the business as far as how big you are. Are you, do you have revenues? How many patients do you have in your trials? So there's a lot of factors that go into that. Okay,
that's great. Another question came in is what percentage of companies end up tapping the D&O policy? I think we talked earlier a little bit about those more public setting claims, but maybe Matt, if you have any visibility into kind of.
Yeah, this is a tough one. I from a private company perspective, there actually is not a lot of data around how many policies are triggered. And so I can't really answer that question. I know I can tell you this. You can think of many other areas of claims. Auto claims, for example, happen every day. D&O claims do not happen very often, but when they happen, they tend to be pretty severe. So they're with less frequency, but more severity. So, a lot of times people think, hey, how could this claim happen? It's never happened. Might have a longtime executive that's had a career over 30 years and never had a D&O claim, but it could happen tomorrow and it could be severe. So you just never know what's around the corner.
Okay. Another question was around which insurances are bundled with others. So I know we talked briefly about the other types of insurance outside of D&O and cyber, but anyone who's gone through a D&O policy application and or renewal know that there's some ancillary insurances that typically get bundled with or applied for at the same time. And one of them actually is cyber. Yeah. Matt, maybe could you just talk about those that are typically bundled with the D&O versus those that are kind of secured standalone?
Yeah, that's a great question. So the D&O is typically part of a broader, what we'll call management liability package policy. So this is intended to cover a number of different areas. One would be employment practices liability. So this is meant to deal with things arising out of the employment process. And crime coverage, which is for theft of money and securities, and then fiduciary liability. So as you're starting to think about bringing on a 401k or retirement plan or employee benefits plans, that fiduciary liability can be built in to the management liability policy as well. Cyber is sometimes bundled in with management liability and sometimes standalone with a different carrier. So just as you grow and evolve, those lines of coverage can be added to the policy. They're usually separate underwriting and application processes, but a lot of times intentionally kept with the same insurance carrier.
Okay. Two questions came in around clinical trials. One, just highlighting the importance of clinical trial insurance being a hot topic. And if we had more time, we could talk about that probably in great detail. But maybe another question was, what is the impact of beginning clinical trials on your D&O and the impact on D&O insurance?
Yeah, so that's typically that will come along with a fundraising event a lot of times too at some point. So there's really a number of aspects that might drive the potential for raising limits or potentially increased premiums. So the impact of clinical trials is there's actually a statistic out there about 48% of D&O security suits are filed against life science companies alleging misrepresentation of efficacy or safety. So when you think about that from a D&O underwriter's standpoint, when you're going into trials, there's an elevated risk around data and the FDA process. So that's an inflection point that's looked at that could warrant the opportunity to buy higher limits of coverage. And you're typically that's going to come along with hiring more employees, bringing on additional assets. So all of those things are factored into both premium and your overall limit that you're going to want to buy.
Okay. We have two questions pertaining to IP. So I'm just going to state them all so you can cover this topic. It says, what does an intellectual property insurance cover? Does it cover infringement of our patents, lawsuits that claim we infringe upon others' patents? And then another person had asked, would D&O cover litigation of patent infringement? If they maybe are considered to be going up against a company that is more well-funded, I'll say.
Yeah. So this is unfortunately, the IP market from an insurance perspective is extremely limited. And a lot of times I find the policies can be cost prohibitive. But from what I can say, the policies are written in a way that you can either buy an offensive or a defensive policy. Offensive meaning you have IP that you would want to protect, and this will fund costs to go and take action against a third party that you feel is infringing upon your IP. The defensive policy would be set up where another company, as you mentioned, multinational companies have deep pockets. They may come after you to, just to really impede your progress. And that defensive policy would fund the cost to defend your IP. So from that perspective, that underwriting process is, and there's only a few carriers that are really good at it and do it, but they're looking at the due diligence that was done during the filing process and then looking at the technology itself. So that's something that I would say, if I look at all of our clients, there's the minority are buying those policies, but it's something worthy of having a conversation with your broker.
Perfect. Thank you. I know we've got just a few minutes left before we go into the breakout sessions. I'll yet again encourage everyone to stick around. Joe, I know you have a question that might be a good conversation for one of the breakout rooms around kind of what should I expect a certain policy to cost, which I'm sure it depends in many cases. But I just wanted to maybe wrap up and do a quick round robin with Matt, myself, and Roberto, and just, maybe give one or two actionable suggestions for everyone who's sitting on this call today to go back to your office and say, I can go back and do this today, that may be able to help the situation of mitigating risks and, only enhancing, your position when it comes to securing insurance. So maybe, Matt, I'll start with you and then I'll go to Roberto.
Yeah, I think, we spoke to it a bit, but I think just taking a proactive approach, right? So companies are changing so quickly and really focused on the science. And just as like you would schedule a regular checkup with your doctor to understand your personal health, the health of an organization is important. And from a risk management standpoint, scheduling regular check-ins with your insurance provider, having those conversations just as you would, with any trusted advisor about where you are today and where you're going tomorrow, and getting the advice around what you should be thinking about it, I think is really important. So those meetings I think are important. And I think just Barb, you speaking earlier about having information ready and prepared. If you're thinking about going into this, I don't know how many folks today are thinking about going into the D&O underwriting process, but some of the things that we outlined earlier as far as the information that needs to be available, have that prepared and have your team prepared to be able to present it so you're ready to go.
Perfect. Thank you. Roberto?
Yeah, so the same way that you're going to pick a lawyer or an auditor with industry experience that you're going to rely on to help you run your business and make yourself successful, your broker for insurance is somebody that you want to be like that. So get recommendations from colleagues and then find someone that you trust and can rely on. The broker is going to have a lot of data about what's available, what other companies are doing, and obviously the experience with insurance and underwriting to help you get through the process and help you explain to your board, what it is you need and what sort of coverages are adequate and, what might be a bit more than is necessary. So having that advocate, somebody you trust working with you is going to be really important. And, one way to find that person is, via what we're doing here today at Life Sciences PA. There are a lot of people who've gone through the process as consumers of insurance and reaching out to them and getting recommendations for brokers or just having them walk you through the process is something that can be really valuable. So I'd encourage you to stay in the breakout room, ask questions there, make connections, and, find yourself some new colleagues and friends who can help you with these processes.
That's great. Thank you. And I will just round it out with one piece of advice. And I use this at several of my companies in the same vein that our clients, being very small, outsource a lot of functions. And we talked a little bit about outsourcing IT functions. The one thing that I have with a few of my clients is that we ask our IT function outsourced to send a list at the end of each month of who has access to all the systems that you're working in, because we might be more mindful of employees when they come and go, but you may forget when you're using a consultant and you're not using that consultant anymore, and they still may have access to your files. And it's always good to know at any given time who has access, whether you're using SharePoint or Ignite or Box.com, any of these platforms, just always good housekeeping. And it's more proactive to have your IT person send that list as to you just, haphazardly going in and looking to see who has access at any given time. And that consistency and that cadence of showing those reports that you've reviewed it actually bodes well when it comes to securing insurance, because they see that you're trying to do things more proactively. So just something that you could go back and consider, and you could do that whether you have an outsourced IT function or an in-house IT function. So just something to think about. So with that, it is exactly 10 o'clock. So I'm going to wrap this up. We're going to go into breakout rooms. It was really nice having this conversation. Matt and Roberto, can't thank you enough for giving your industry experience from both sides of the table. And hopefully everyone enjoyed this. Look forward to talking to some of you in the breakout sessions. And again, thank you to Karen and Amanda for helping us kick this off.